Ladies and gentlemen, welcome to the Big Tech Frenzy. Once again, just give me one quick second. There we go. And let's get this show on the road. So, as you guys saw in the title, that's going to be the main topic of discussion today. Is it time to buy the SoFi dip, the BMNR, quote unquote dip? Now, what I mean by dip is the fact for BMNR, maybe we can start there and then work our way into other conversations so I don't keep people confused on a green day like what BMNR ended up seeing, up 0.8%. Now, this is the confusing part about holding on to these types of plays, ones where they're tied to another asset, but potentially that other asset has a different price performance than BMNR. BMNR is supposed to have a leveraged play on Ethereum. If it goes up, a lot, then BMNR should move a lot. If Ethereum goes down, then BMNR should fall even more. But yet Ethereum on the day is, it's adjusted. So the price is a little bit funky right now, but essentially it's up roughly about 4% because it runs in, 48 or 24 hours. So the price here is not actually reflective of what you can just see from, this point to this point. So obviously Ethereum did end up seeing a large bump up, roughly about 4% today. And yet BMNR ended up seeing only 0.8%. So it says it's flat. It's not actually flat. That's just because the price just adjusted at 7 o'clock. So, 3 minutes ago, my point would have looked better. But the idea being that BMNR's book value has gone up by more than 4%, and BMNR stock roughly flat. Doesn't that suck, right? You're buying one thing, not the actual asset, but the company that's buying more Ethereum than you could ever buy is underperforming. But that's the game, right? Whenever we look at the market net asset value of BMNR, which is really what we should be tracking, that has gone up over 4%. So if we look before, whenever Ethereum was essentially $4,170, we were roughly around $11.05 billion of holdings. Today, we're at just it going up just a little bit. What is the price again? 4,314. So yeah, we're roughly about $12.75 billion. For every $1 that Ethereum goes up, inherently BMNR should go up by 2.6 million because that's how much ETH that they actually hold. So they've just made an additional $1 billion, not an income because they're not selling any of it. Potentially, if they were staking, then the actual stake would go up as well because you're getting a percentage of the Ethereum, but the Ethereum is tracked to US dollars. So as it climbs, the dividend actually should climb as well if you're pegging it to US dollars. But if you're pegging it to Ethereum, then the take is the same. Okay. That's the interesting part about holding assets, by the way, especially for a name like BMNR or just stocks in general. We always track them in US dollars because that's the currency that it goes off of. But if, for example, someone does not want to accept US dollars to sell their stock and there was a marketplace to sell your stock for something else, more of a harder asset, or, potentially Ethereum or Bitcoin directly, then it sort of saves you from the downside of inflation or concerns of potentially government shutdown or things like this that could potentially hurt US dollars. Okay. So whenever you're pricing in assets, you got to take into account that currency fluctuation and these sort of things can be. Yeah. What is staking? Staking is essentially you putting up your dollars to verify the network. So you're allowing a node, which is a computer that essentially reads all of the transactions. You're saying, hey, we are going to verify transactions and make them legitimate. And we're going to guarantee that the transaction's legitimate by putting up dollars. So unlike Bitcoin, which is sort of incentivizing the most powerful computers, this is actually incentivizing the most amount of capital, which is, pretty useful. But then that also means to reward people for putting up their capital, that they will give you a return. So the idea being that you cannot fraudulently put through a transaction because a transaction is not verified by one single computer. It's verified by, thousands and thousands of nodes around the world. So if all of them agree that a transaction is legitimate, then that makes it legitimate, right? Majority is what gets passed on and continues the blockchain, right? The actual chain. But if there's someone saying, hey, you know what, this transaction's real, I made $1 million transaction, and the other 1,000 computers says, actually, no, we saw $100 go through, something's wrong there. And if that comes through and you have minority vote, then you end up burning that stake. They take away that money for you lying on the network. It doesn't happen because you can't, it would be impossible to try to hack Ethereum. That would be a sense of trying to break into the network. So it doesn't actually happen. But in case that someone did try to, they have to put up money to verify a transaction, meaning that money could be taken away from you. Does that make sense? That's literally what it means by proof of stake. Explain it in terms of pizza. I'd you have to I don't know. You got to have at least half the pie to even have any vote. How about that? I don't know. It's honestly the it would be the exact same, except with dollars, I'd replace it with slices of za. I don't know. Okay. So it's a tool banks can use to so not just banks. Ethereum itself has a layer of security that like a transaction on Ethereum is anything that is put onto the ledger. Okay, so blockchain, essentially the idea, this whole big ledger is just essentially an accounting book. Every transaction, someone says, hey, I did this, I took this money and I sent it to this other wallet. Okay, I sent it to this address. So Ethereum itself is the ability to set up those addresses, the ability to send from one address to another, and then the nodes that actually say, hey, we're going to verify that transaction happened so we can keep account of 100% of all where Ethereum goes. That's why whenever people say, oh, this is the money for criminals and everything, it's not true at all because it's the most tracked, thing ever. Like it's an how do you say? I always mess this up. Unimmutable ledger. You can't alter it. All the logs are tracked. And the way that they're tracked is based on those nodes and based on a consensus of all of the money that's being staked. So you need to have more than 50% of all of Ethereum to actually take the vote of a transaction and say, hey, this is legitimate, but no, it's actually not. And if you have more than 50% of Ethereum, you don't have to lie at that point, right? So it's never going to happen. Not stake like food, stake like S-T-A-K-E. Exactly, Tanner. Bang, got it. Yeah. Immutable. Thank you. Can't be changed. Programming talk. And that's the thing about Ethereum as well, is that although you hear about people like Vitalik Buterin or Joseph Lupin and these sort of people who have invented Ethereum, essentially the way that they've done it and Bitcoin has done it and why everyone trusts it so much is they've put the code out there and then sort of locked it behind a door where there's no developer backdoor. They can't change anything without people voting it through. So Ethereum does get upgrades, but the entire network has to agree to those upgrades, similar to a shareholder vote. Okay. So that's also why everyone's very excited about Ethereum, even though Ethereum and the Ethereum Foundation can have employees, but those are also agreed upon, right? So pretty interesting. Pretty interesting. Any word on what happened to Derek White? No, not yet. I don't know anything just yet. Are you getting the new Google products? Let's talk about that really quick. I own almost all of the Google products for the Internet of Things sort of. Here, one sec. Let's bring this up. So they ended up showing off. Oh, of course. Yeah, no, they deleted it. That's good. Okay. Made by Google. they ended up showing off some new products, which were described exactly how I said they were going to be described. That you were going to have these products that, you know, for example, the security camera, which is a wired-in security camera, 2K HDR, and right now I have this product. I end up seeing these tags where it says, you know, your girlfriend's home or whatever, right? Like it has some facial recognition. It can see that person. They know that they're home, but it's not in this level of detail. So now, because of Gemini, they're scanning those videos and sending notifications to say, not only does it notice this daughter here, Robin, but she's also driving a toy car. It has nothing along those lines right now, but that's what's coming into the future. This also comes with a subscription model. Right now, Nest Aware does have a subscription model, but they've like doubled the price, more than doubled the price. And it comes with all, obviously, these new benefits. So Robin drives a toy car in the garden. So the garden's based on where the camera is placed. You set that as the user, so it doesn't know exactly where it is. But, you know, this level of new detail is quite interesting. Also, what a daughter to just run over the, that's what it should have said. Robin drove over your nice garden. Time to take away the car? Like, I don't know. That insane. I guess that's what it's like having kids. Who's eating all the carrots? And this one actually, my camera does that as well. It'll notice animals and stuff. That's already there. Notice vehicles, animals, humans. It can separate those, but it does not separate from, oh, a rabbit is in your front lawn eating your carrots. It's not doing that. But this is what's happening going forward. Like whenever I say AI is going to be doing everything, think about the level of, you know, quality of not just at home security, but like for real security cameras at institutions to alert authorities. You know, imagine a security camera not just keeping an eye on everything that's happening, but knowing, like if it's in a convenience store, that, oh, wow, this place is being robbed and maybe I should call 911. And it alerts it, right? And so even if someone is held up, a bank is being held up, the authorities will immediately be called because the security cameras notice that someone's being held at, I don't even know if I'm allowed to say that, but like, you know, they're being robbed at gunpoint or something. YouTube's weird. I don't know if I'm even allowed to say it. But yeah. So I'm extremely excited about that future. Obviously, some people are extremely worried about that future, and I understand both sides. So, yeah. And GPUs are needed for all that image recognition, for sure. For sure. It is a lot of token generation. The level of quality or the level of token generation between a regular AI prompt that is sourcing through pre-trained data and has a certain level of parameters, that's one thing. The difference between that and reasoning models is something, I forget what it was. It's like 8,000 more tokens generated, or maybe it was 40x, and it was 8,000 total tokens in order to do a reasoning model for just a text prompt. Once you start getting into image recognition, into Sora 2 and complete video and like not just reading out and trying to reply in text, but trying to reply in pixels and in full video where all of them are moving, it's an insane amount of data that's being processed by these GPUs. The level of demand is crazy. So yeah, there was a thing that ended up coming out. I think it was Amazon's now the size of, or sorry, NVIDIA's now the size of Amazon and Meta put together. I think that's what the comment was. But the truth is that NVIDIA is a more important company than both of those companies put together. That's the truth. Sorry to say it, but it is by far the truth. Also, there's been a lot of talk. It was so funny. Before I started this live stream, I'm like, I'm going to segment out everything that I'm going to be talking about. I'm going to do chapters. It's already gone, guys. So if one of you guys want to help me out and, and tell me what the chapters of these conversations are, like, let's figure it. I mean, honestly, send me your price. I got to figure out, someone else has got to do these chapters for me. It's unbelievable. I can't do it because I've got too much ADHD brain. I'm all over the place already, and we just got started. However, Amazon's another one I want to talk about because obviously I get a lot of questions about Shopify being such a large percentage of my portfolio. They're expensive, but George says, bruh, AI. Okay, you tell me the AI tool that will do that for me, but I can't find it. So, yeah. Honestly, StreamYard should do it. YouTube should do it. These sort of tools, but they're not there yet. So it'll come, but I want it today. So anyway, people ask me a lot about Shopify being one of the largest positions in my portfolio. Fully aware. Now, Amazon is always being talked about of, oh, Amazon's going to kill Shopify. Shopify is going to kill Amazon. Who is better? The idea of a centralized marketplace where everyone comes to one website, or the decentralized marketplaces where companies can create their own platform. You get more or more customization, better take rates that way. You earn more on your own platform, better cross-sell, but you lack what do you call it? Like findability. I'm blanking. It's one of those days. But your ability to be found is much harder, okay? That's the problem. Everyone knows Amazon.com. You're guaranteed to get eyeballs if you have a good product. That's quite interesting. But I wonder, in a place where AI shopping ends up becoming a large piece of the overall way that people find things online, is the need for Amazon to be the place where everyone finds their product going to go away? What if areas like, ChatGPT or Google Gemini directly are going to be able to tell people where to go? And that might be going to Amazon.com as well. But then that's the question of take rate, right? Will Amazon be able to require a large or ask for as large of a premium from third-party sellers if the exposure part is not what they're offering them? If the reach is actually being given to them by ChatGPT and many of these other models, Shopify looks to be very well positioned in that case. Now, obviously, I'm a shareholder of Amazon. I've purchased it as recently, I think, as last week. I'm still very bullish on Amazon. I'm bullish on e-commerce in general. But it is quite the advantage, these next stages of e-commerce, that position Shopify to be even stronger. Okay. So yeah, searchability, locatability, exposure, reach. Yeah. Something along those lines, right? Yeah. So, by the way, buy the dip on BMNR. I did today. I think that any time that Ethereum moves up this much and BMNR does not, that lowers their MNAV. Okay, that's better pricing for you as the investor. Then we also got to see a bunch of news today from BMNR around companies. Well, actually, it wasn't today, but I found it today. Of Rex shares, for example, creating an income and growth ETF around BMNR. There's a 2x levered ETF on BMNR. All of that ends up going to buy more and more shares of BMNR specifically, which then gives them more ability to go out and buy Ethereum, right? The higher the price of the stock versus the MNAV, the more that they can end up diluting equity and buying more Ethereum, per dollar of equity that they end up selling. So BMNR, very well positioned. I continue to be very bullish, buying dips on days like today where we see such a large run up on Ethereum, up plus 4%, and actually running, as we're talking, 43.31. Every dollar that it goes up, that's an extra $2.6 or $2.7 million to BMNR on book value. Okay. Cash or SoFi. SoFi, this is another one. I put out a video today I'm sure most of you guys saw it. It was like, it just absolutely blew up on the channel. Wall Street got caught. Not exactly. I don't think it was fraudulent, but boy, oh boy, did they make a crappy video or a crappy report today that I just thought was very, very embarrassing. Some heads are going to roll. Some people are going to get fired. This is bad. Essentially, what we ended up seeing was, and I can present a similar video to what I put out, but this ended up coming out. We've talked about this a lot on the live streams. Upstart ABS securitizations are showing increased delinquencies in both the months of July and August. Then, after SoFi, talked about saying, hey, we're not seeing anything along these lines, they responded extremely quickly. Credit is performing well. Upstart then said, BTIG reported on Upstart and said, guys, we're sorry. It actually is not showing 11.2%. What we actually see is that it's reporting 6.2%, up from 6.1%, which is very much in the range of the 6 to 8% delinquencies that they were expecting to see. Okay, if we go back, they were expecting to see 10.4% in July and 11.2% in August. Those are insane increases on the normal 6 to 8% average. I mean, like, you're talking about doubling in delinquencies in 2 months. Like, of course, red flags are starting to appear. The lenders started to get worried. Billions of dollars dropped off of these stocks. We ended up seeing this. You could see this in this range. Pagaya, Upstart, SoFi ended up going from 28 down to, near $25. Today, it actually extended the losses even after this. I thought we were out of it. It was, at the time that I took this screenshot, up 2%. And then we went from up 2% to down 2.5%, which makes me, not very happy. But you know what? If you're looking to acquire more, maybe it's a blessing in disguise, because clearly the delinquencies are not bad. Things are actually doing much better and still staying on track. Yes, you can report, okay, you know what? We were at 5.4% in June. Now it's at 6.1, 6.2. There is some level of increased delinquencies. But once again, that's from Upstart. That's not what SoFi is seeing. And on multiple accounts, SoFi has been saying that, things are performing in line with what they are expecting. So I'm all shoulders here. I'm sitting here going, okay, either it continues to fall, and everything that we've been expecting for September and in website traffic, higher than expected app downloads, rate cuts coming in, all of that is looking perfect. Okay. And now we saw a run up, which, to be fair, was an extremely fast run up in the stock. Over the last 3 months, we ended up going up nearly 70+%. Okay. Actually, sorry, more like 90% from, peak to trough. But now in the 3 month, we're down to 46, 47% on the last 3 months because of this drawdown from $31 to now $25.76. Historically, $25.76 is expensive. Okay. But the growth that we're about to see is unprecedented. So how do you match the increasing multiple for what we are most likely going to see an increased level of growth rate and a change from analysts to upgrade their new pricing on SoFi? Right? That is going to come. Earnings on SoFi is October 28th. What was also interesting in that, I was going to put it in my video, but I thought it's actually not too big of a deal, so I'm not going to hype people up. But what is interesting is that we saw that they adjusted earnings from October 29th to October 28th. There's this old Wall Street adage that says the earlier that you announce earnings from whenever the date ended, the more excited you are to end up showing off your earnings. So you see financials do this all the time. They're really, really into this. So they end up doing in the morning earnings super early. Like, I'm talking like JP Morgan, Bank of America, they're showing off their earnings in like 2 weeks. They can't wait to rush it out because it's a good sign to Wall Street that they're confident in their earnings. Whenever someone needs to delay earnings, it's actually usually a really bad sign. Okay. So even whenever companies have, an additional 48 hours after earnings to actually release these types of numbers, or multiple weeks to actually release their 10Qs and 10Ks. The earlier you can get that out, the better. Okay. And stocks usually drop if you end up delaying on earnings, because historically it usually means bad things. It's almost like a split versus a reverse split. They don't actually change the real economics of the business, but it's a good sign versus a bad sign. SoFi bringing their earnings forward just an extra day is showing their competence to not only put earnings out even faster, but also sort of a sign to Wall Street to say, hey, you know what? We are about to see good earnings. Take that with what you will. It's a superstitious thing, but yeah. Got my first 2028 leaps today on SoFi. Can't be mad. Cheers on being furloughed. Put some more money into Timmy Cook. Absolutely, Steve. However, we have made some changes, and I will agree to this, at least for the next week or so. I will do this for the people that don't end up seeing this. But for the community portfolio, things have to change. Okay. So I got way too many donations. I know this is something that I shouldn't be complaining about, but unfortunately I am. It took me way too long to punch in all the $10 donations. And while I really do appreciate the support, it was like an hour and a half for me to end up plugging it into my brokerage and, updating it on Notion and everything. So I either take down the community portfolio and we just end it, but I don't want to do that. So going forward, I've adjusted the minimum to be $20 to hopefully slow down the amount of donations. Okay. If I have to, I'm going to adjust it to 50 and eventually 100 if things, stay hot. So I do love the community portfolio. I love picking out the stocks, big fan, but it is taking up too much of my time. So going forward, it'll be 20. And just in case that anyone doesn't hear this message, I will do the $10 ones going forward. It is first world problems, but I'm also I'm just not that hurting for it right now. Nvidia's at all-time highs, baby. I'm not counting pennies anymore. Scared money don't make money. SoFi fear is irrational. More SoFi, sir. Thank you. Kevin, absolutely will do. SoFi and Apple. Let me take some screenshots real quick. We actually just bought some more SoFi today, so that'll work well. Market cap limits is still the same, $1 billion. That doesn't change. Okay. Let's go on to the next piece. Oh, come on. Next, by the way, PayPal. I'm not in PayPal right now. I don't know what's going to happen with this name. If they continue to push forward in sort of the next version of artificial intelligence, if Venmo continues to be extremely popular in fintech, I hope to see some great evidence of growth from them going forward. But these types of things is very exciting. PayPal's been on the forefront of agentic commerce. Alex, Chris, and their team has seen it from a long time, and they continue to push out more and more products, showing off more partnerships with Google, with OpenAI, with many of these different partnerships. So why can't I open this up in another thing? Oh, it looks terribly blurry. But they are putting out more and more examples of showing how they are going to be using this, and showing off more showing off more partnerships that they are going to continuously being pushed out. So yeah. Okay, that's actually a good thing to talk about. Do I regret selling Tesla? It actually seems that Tesla right now is beating Nvidia just slightly from where I sold Tesla to buy all Nvidia. So right now I'm down on a cost basis on Tesla. Do I regret selling it though? No, I'm actually surprised by the market reaction to the stock right now. Like, we just found out, or sorry, we didn't find out, but like it just happened where Tesla is now no longer getting federal incentives, the 7,500, to sell their vehicles. So this seems like such a run up based on data that is not concurrent. Everyone's seeing all the sales channels being like, wow, you know what? We're actually seeing a lot of data that September's doing really well for sales. Like maybe this company is coming back. Yeah, no duh. This is the last month that people who have been eyeing Tesla products can get it with a $7,500 discount. So for me, I want to see, what does it look like for new purchases in October, November, and December? Let's see what it looks like after the incentives are gone. You know, that I think is going to show a real picture, not just pay packages and September and August data, for which there have been pushing, many more sales during that time. I mean, they did a freaking, during their earnings call, they were talking about, hey, if you want a Tesla, this is your time to get it. So they did get a lot of purchases. I think everyone expected that. But I am surprised by the stock moving up as fast as it has, like over the last 3 months, being up, nearly 47% on what seems like a temporary sales boost based on someone else paying for those cars. Am I crazy? I'm not anti-Tesla. The next car that I will buy, and I promise you, my girlfriend is trying to pick out her favorite Model Y right now, but her car is still working. So I'm trying to hold her off an extra, couple days or so. But I mean, like in the next month, we're probably going to have a Model Y here. I'm a fan of the product. I love a smart car that can update, over the air. What an amazing product, full self-driving, love it all. But one, it looks insanely expensive versus any of the other Mag 7 or really any other tech name. And I think a lot is being pulled forward right now, especially whenever it's up, to $460. The multiples on this is just insane. But who knows? Tailwinds, Robotaxi, cheaper model, release of FSD. I'm aware, but like a lot of companies have a lot of tailwinds, at much, much cheaper multiples. I feel like I get the benefits, the complete benefits of Robotaxi and FSD and Optimus and all of these different products through NVIDIA, and I'm paying 1/3 the price. Less than that, way less than that. So we'll see. Guys, there's going to be some just inherent selling off of LATAM names, Nubank, dLocal, Mercado Libre, because of the government stuff that's happening with the soybean deal. I'm not following it closely enough, but honestly, it's perfectly fine in my opinion. These are all short-term pressures. I'm more focused on the actual companies than I am the macro news, which seems to come and go constantly with these LATAM names. Constantly. Get yourself a Model Y Performance. Yeah, I think we will. Or at least the long range for sure. I want the range. I don't know how much I need to be able to step on the accelerator and go, but who knows? We'll see. But another thing for me is the white or the black interior, because the white looks unbelievable. It does. But I got a big dog that I think is going to make a mess of those back seats. And I don't know if the white is going to work as well with all the dog hair and all this stuff that is inherently going to happen because my girlfriend has to bring that dog around. But yeah. Tanner, water break, good idea. Tanner looks like a Rivian guy. No, I don't know. I think the products look good from Rivian. But you definitely don't see them around as much. And I do like the Tesla network effects that they do have. I think that that's important. I have the white interior and a dog. It's fine. I guess that makes sense. Y'all are brave with that white interior. Well, it's not fabric, right? It is leather. So like, I understand like it's not going to be too bad, but I could seeing it being harder to maintain than the black leather interior. Maybe that's just me. But boy, oh boy, does it look nice. Like whenever it's fresh. But I also haven't seen, a white interior Tesla that someone has, had, and whether they have kids or dogs or something like this. Like, how does it hold up? I'm curious. Obviously, from the Toby and Tobias in chat, he said that it's fine. Synthetic leather, easy to clean. All right. Is the dog white? No. Have you guys not seen my dog? She's a cutie. No, she's not white though. Okay. Let's continue on with the actual news. So we talked on Google. First of all, it does look amazing. The new subscription prices being as high as they are, I actually do think because of the tools that Gemini can add to it, it does make it very worth it. But it also means that people are more tied to that marketplace. That's another thing with the Internet of Things, like the speakers and the thermostats and the product, like cameras and everything. You kind of have to pick one. Like, you need to pick one, and it's hard to go across multiple different names. But the good thing is with Google and Google Home, there are other products that integrate like third party into Google Home. So for me, they've been by far the number one easiest solution. And now that they have like these Google Home premium solutions and everything, I think they're going to get a lot of money out of me over the lifetime of having me as a customer. So as a shareholder, I'm sure that's going to make people very happy. But once again, it makes up for a very small percentage of their overall earnings. But you got to give it. This is another thing. I give so much credit to Google for potentially not having the best products in these spaces and just continuously never giving up. Like the Amazon Fire Phone, absolute disaster. They just stopped it. They were just like, oh, you know what? We actually are not good in this space. We're never going to try again. That's it. Google went from the Google Nexus products to Google Pixel, and it was a budget phone all the way up until roughly about the 7 or 8. And then it became, a flagship phone amongst the Samsungs. It's known as the smartest smartphone in the business while being a little bit less on the specs. They've just completely ramped that up, and now it's a, flagship product. On the GPU side, there's a lot of companies that either try their hand at custom products, but Google's custom silicon, the TPU, has been around for a long time. It's never been that good. It's now getting really good. So Google TPU, they've never given up. They didn't scrap the project. It's now becoming very good. Gotta love them for that. The cloud side, they're doing very well on. Obviously, search, they've been number one on, and that's what's actually funded all of these projects going forward. But you gotta love, even on the Internet of Things and the products there, Alexa had a good head start, and some of these other companies that have had amazing camera products and everything, Google said, no, we're just going to keep putting out new products, innovating, and hopefully dominate going forward. So big fan of Google right now. Once again, this is why I need more chapters. BMNR, I didn't talk about this, but this is quite interesting. Did Cathie Wood buy an additional 52,000 shares of BMNR, now having 6.8 million shares of BMNR? It sure looks like they did. ARK Investments. Quite interesting. Another 52,000 added October 1st. Gotta love it. And honestly, it seems like that's the case for everyone. Potentially, October, November, and December are pretty good quarter for crypto in general. And there's sort of a tying of pricing between Bitcoin and Ethereum. So, for example, while I show you this, this is not the same asset as the one that is primarily held at BMNR. They have about 192 Bitcoin. It's nothing compared to their ETH holdings, but October is a slamming month for for Bitcoin. And if Bitcoin and Ethereum have been tied in a range of pricing over time, could be a good sign for Ethereum. Now, I'll show you here really quickly what I mean by that tying of pricing, because BMNR, Ethereum and Bitcoin have a ratio in their pricing. I can show you this here. And it does go lower than where we are today, but not too much lower. The average is 0.0479 ETH to Bitcoin pricing. It can get lower, as you can see. It can actually get below 0.02. But the average to where we are today is actually going higher. So if Bitcoin ends up pulling up the price of crypto and the market cap of crypto in general, that could be quite good. If 401ks start allow for a diversified and alternative assets to being purchased, that could be a massive tailwind for crypto in general. We're seeing, many new stablecoin products and all of these things being pushed out. Tether to launch their new USDT stablecoin through Rumble's video platform. All of this stuff just goes to increase engagement over time. It seems like there's a new stablecoin announcement every single day. Not all of them are going to be successes, but someone is going to throw, and that dart is going to hit the board. Right? It's Uptober, baby. It is Uptober. Tom Lee, by the way, spoke at the Token 2049 event in Singapore today. I haven't actually seen it just yet, but it's a good way to start Uptober, that's for sure. What percentage of your portfolio is BMNR? I don't know if I should say that quite yet. It's a speculative position. It's less than SoFi for sure. It is single digits, but it is growing. I just don't know if I want to say how much of a degen I've been lately. So maybe I'll keep that for a video later on. But I am continuously buying what seems like every day, but it hasn't been every day. But yeah. Okay. Deutsche Group, by the way, and Circle announced collaboration to advance stablecoin adoption in Europe. That was another one that ended up coming out today. SoFi, which we talked about why I think that this dip is just, a little crazy. We all know the quarter's going to be great. I think there's a increasing chance that we end up seeing 3 rate cuts throughout the rest of the year. In fact, let me check the chance of that right now. December has an 89% chance of 2 rate cuts, 11% chance of only 1 rate cut, and 0.1% chance of no more rate cuts. All right, so this is where we are today. This is 1 rate cut and 89% chance is 2 more rate cuts, 50 basis points more. And then once you start getting into January, you start actually pricing in a 3rd rate cut. Okay. So quite interesting. If that happens, that actually accelerates the profitability of SoFi, as they've written so many loans in higher interest rate environments, which is actually really good. SoFi is also continuously pushing into SoFi Plus. Like I said, and I've said many times before this, 2025 is going to be considered the year of SoFi Plus. That's how we're all going to remember this year. The loan platform business, sure. This, definitely. And they continue to push this forward, using Josh Allen as well, but saying, hey, you know what? Get SoFi Plus today and earn a chance to get tickets to the big game. A 3-day, 2-night hotel stay, round-trip flights, plus $2,000 in spending cash. All you got to do is join SoFi Plus. You can either pay your way through it, direct deposit. It could be free. But boy, oh boy, can you win a lot just by getting your money right, essentially. like you're not doing anything other than, getting a better banking experience, and they might throw something on top of that. Let alone, here, I'll even show you this. This is how much they're pushing forward on this. We still have the APY boosts right now. So 0.7% for a 6-month APY boost if you join SoFi Plus today. Okay. They also have 4.6%, so a 0.8% boost if people get SoFi Plus through SoFi at Work, which is their that's like their employer benefits, right? So employers like Meta, Salesforce, Tesla, Microsoft, they all actually use SoFi at their work to help with their employees pay off student debts and everything. So they get a SoFi package that can, they can get help being, funding to pay off those loans through their employer. Employees do that to keep employee retention. So they pay a little bit more instead of all cash. Some of it can actually be written off as an expense to sort of secure almost like a better price for compensation. And on top of that, they're getting a better bonus if you go through the employer packages than if you go through SoFi directly. So guys, if you guys are looking at potentially using SoFi Plus, and you work at Salesforce or Tesla or Microsoft, Meta, any of the large companies that end up using them, consider it. You'll get a little bit more on your money, right? And potentially help out a stock that you already hold. So they just slapped another reward on top of it. And that's all they've been doing this quarter. Like they just added the 5% cash back on bookings with SoFi Travel. You now get rate discounts on student loan refinancing. You get all these benefits, like way more with SoFi Plus. They just keep adding on more and more and more. Let's give people more money. Let's offer them a sweepstake. This is a sales and marketing expense. All they continue to do is add more and more to the SoFi Plus experience, and yet the benefit for them is the exact same, which you could say is margin compression, but it's a sliver for the benefit that SoFi Plus actually adds on. What you should think of it as is, oh my gosh, they're realizing that the flywheel of SoFi Plus is working. That's why they're doubling and tripling down on it, which means that the flywheel is when people end up using direct deposit with SoFi, they bring on more deposits, obviously. They end up spending more, signing up for a credit card, getting their next home through SoFi, through their SoFi Plus subscription, getting a discount on that. They start to use more and more of their products, which means the lifetime value of that customer essentially 7x's from a user that doesn't have it, which is just insane. Doesn't that mean they get more profitable? Yes, the lifetime value is much more profitable, but the idea of them charging, deposits are actually a liability. So the reason why JP Morgan and all of these companies pay essentially 0.01% for checkings is because they want to keep the entire cost of those deposits as low as possible. SoFi has like the highest APY right now, 4.5%. That's actually, that hurts margins. But it's because they know that in the end, they're going to make so much more off the total customer than essentially any of their competition. So yeah. Does anyone own Upstart? I'm not a shareholder of Upstart. I don't think that they're a bad business. I don't. But I just think comparably to SoFi, you need to look at the pricing between those two companies. The valuation is, it used to be very in favor of Upstart. Now it's comparable for sure. But the amount that Upstart can make on a per customer experience, like whenever we talk about lifetime value of a customer, it's just not even remotely close. There's zero flywheel. There's, they have to pay for every single one of their customers. They have to pay the top rate for every customer because you're paying for a lending customer. If they can get, the sort of AI model down, then, they might be huge. It's like a company that's going to be $1 trillion or bust. I mean, there's no in between. But personally, I think either it'll take way too long to get there, or it's leaning closer to bust than anything. I'm not anti-Upstart, but the SoFi, like SoFi's ability to get to where they want to be before them, I think is there's a huge probability of that. Huge. Let's see. Okay. Like the loan platform business is Upstart's business. But then Upstart has to go to like Google Ads and all of these things to, try to acquire those customers. SoFi just gets them through a checking account or SoFi Relay and then can say, hey, by the way, we noticed because you put in your SoFi Relay that you have a personal loan, you have a credit card, you have a home loan. You're actually overpaying for these. It's very cheap to give a push notification on someone's cell phone and saying, hey, have you checked out our rates? And in fact, SoFi is so smart that they will pay you to check their rates. They'll say, hey, you can get 10 reward points if you check your rate, but that's like 10 cents, Maybe they'll give you a couple bucks for checking your rate, but still that's nothing compared to paying thousands and thousands of dollars to find hot loan leads like what Upstart does. It's so late in Sweden now, but I wanted to join the live. Thank you so much for being here. Really appreciate it. Crypto looks so strong right now. October's a good, over time, I've realized just how much there's sort of a cyclicality, like sentiment just drives people's investing behavior, at least at the start of months for sure. I know, 90% of you are going, yeah, Tanner, no duh. But for real, I am surprised that September came, September 1st, huge sell-off because people are going, hey, you know what? I need to front run what's going to be a terrible month. September did amazing, People sold off for absolutely no real information. They just go, hey, people usually sell off in September. I'm going to get out before them. And then they actually didn't. People bought the dip like crazy and we were up in September. It was a great month. October now, everyone is saying, hey, you know what? Crypto does very well in October. We need to front run purchasing that dip. Maybe crypto does very well. But so far, Ethereum's looking like it's showing off some pretty good pricing. Bitcoin is up nearly 8% in the last 5 days. People are excited. Did Upstart pay you to say that? I think they would pay me to not say that. I think I was I said some bad things there. Whenever I say like a hot lead, I just mean that there's a high probability of them clicking through on it. Like a cold lead is, picking up the phone and just trying someone saying, hey, would you like this product? I don't even know you. Would you like this product? A warm lead is like, hey, someone gave you a tip that they might be looking for a home loan. A hot tip is like typing it on Google, where to find loan, where to find personal loan. And Upstart's the first one there because they paid to be on that list. That's a hot lead. They walk through the door asking for your product. You bought/wrote on SoFi today. Anyone sell any options on level 1 options for SoFi today? For real, anyone do this yet? I'm curious. How was the experience? I saw some videos of people using it. It looks good. It looks great. I heard there was some pricing problems though. Like if you're actually to exercise the option, I think it costs like $5 or something. That I didn't like. I want SoFi to stay very competitive with Robinhood. I don't need I don't need. I am a shareholder of SoFi, but I don't know if they need the $5. Options too confusing for me. I just stick to owning stocks. Mike, I think that's perfectly acceptable. You cannot go wrong with not doing options. Perfectly fine. The experience is good. Great. Good to hear. I sold BMNU calls. I thought did they just open up a chain? I thought there was no chain options chain for BMNU yet. Am I crazy? I heard yesterday that there was no chain. Level 1 options not yet released to all iOS users. Oh, I'm learning something. Okay. I thought it was released to all iOS users, and the Android users have been the ones that I've heard have not gotten a rollout yet. But maybe even within iOS, they're being selective. I have a SoFi account, was super turned off by their invest platform at first and haven't looked again. Yeah, I think that's the problem, right? It just opened. Okay, Michael with the save. I've started building a position in BMNR for the long term. Yeah. Okay. BMNU options open today. $35 is the highest strike right now. Yeah, so I don't even know what it's at, by the way. 27.73. Yeah, that's for the really risky. You want to write some options on 2x levered BMNR, which is already a levered position on Ethereum. Wild. I am a believer in BMNR, and I have sold covered calls on it. But I mean, I went out of the money. Out. Today, you probably couldn't even sell them for anything. But whenever it was up to like $67 and we were on an absolute tear, I was really thinking Ethereum was picking up pace. So I sold covered calls for like $85. And I was worried that they were going to get closed on. And then like it turned out like 67 was like the peak. So I could have made a lot more money selling closer, but hindsight's 2020. We were running that day. Essentially, what I like to do is just write covered calls whenever we are seeing extremely green days. People's optimism just, pulls so far forward. What strike? 85 for it's already passed. It was like last Friday. It's already, they're already closed. I've bought and sold BMNR many times, says Peggy. Hey, if you can do that, great. But I have over the years have purchased something, thought it's run up too much. Like I would have done if I was a shareholder, back in the day with my experiences before and trying to purchase Robinhood, I would have sold it a long time ago, thinking it's overrun, it's going to turn back, and I'll be able to buy more at a lower share price. I'm sure some of you guys might even have this experience. But the truth is, it's extremely hard over time to predict these types of names, especially those parabolic names that just cannot settle at a certain price. It seems like Robinhood is in price discovery its entire life, like, at least for the last little bit. So, even today, down 2.8%, 139. Unreal. Yeah. I'm doing it today. You bought the Fermi IPO at 25, sold at 37. I mean, congratulations. Congratulations. Haven't touched it. I think I saved it on my list, but I didn't. I'm not touching anything around IPO. Congratulations to everyone else. I don't play that game. Any news on new? Not really, no. I think there's just general LatAm skepticism right now. Not even skepticism. People are just worried about the soybean trade deals with China, and potentially that might hurt relations. Trump's been all over that. So I'm not following it too closely. It's an absolute nothing burger, in my opinion. Yes, there might be some short-term pressure, but like I've said always, my investments in Mercado Libre, Nubank, and dLocal, all three of them, are going to be extremely long-term. So yeah. What's happening with SoFi? Honestly, today I'm a little surprised. There is some comments or speculation that Jane Street that ended up picking up the shares of the most recent round of dilution is now selling off. I guess they would have booked a profit of around $400 million, and now they're looking to turn a quick profit. That's what some people are speculating. Who knows how true that is? I'm not sure. But yeah. Also, I don't care. I know a lot of people really want these immediate answers, but unless there's something just screaming in our face of something going wrong, I'm not going to be overly concerned. Like, markets have a way of, let's say fair values here. There is a price around fair value that they can fluctuate dramatically purely based on sentiment, while the actual company's financials just look like this, up and to the right. But the sentiment during that time is just crazy. Like, a lot of people, because we've been covering SoFi for so long, can look back at the price that we've had to sit through, going all the way from $4 a share to $30 a share, right? The sentiment on SoFi has never changed for me during those periods. Yet the price has nearly 10x'd during that time on obviously better than expected results over time, but they've also beat earnings every single quarter since being a public company. The fact that people still bet on them not beating earnings is crazy to me. It's crazy. SoFi is a covered call haven. I don't think so right now. It's getting a little low for me. Obviously, writing covered calls as it's falling, sure. I mean, that, like, it's worked out for you historically, but I'm not writing covered calls here at 25. I'm buying. I'm not going to buy and write covered calls at the same time. What's up, sir? Hey, Evan, how you doing? How you doing? Let's see what news I have saved from Evan. Every day I have some piece of news that's saved from Evan. He's the news guy. We'll talk about Evan's favorite stock here. Apple has reportedly paused work on planned overhaul to its Vision Pro headset to redirect resources towards a more urgent effort, developing smart glasses that can rival products from Meta platforms. Honestly, 1000% I think that's the right idea. And I think that Apple glasses could be a huge project or product. And I love the fact that they're doing that, because I think that puts pressure on Google more. I think that puts pressure on Samsung. I'm all for that. Let's see what else I have from Evan if I do. Not today. It's not because he didn't post 20 times today. He does, but not anything that I have. We actually got to see a post from Andreessen Horowitz, also known as A16Z. For people that, some people are, well, not a lot of people. I mean, you can just Google this. But A16Z is Andreessen Horowitz spelled out, Mark Andreessen and Ben Horowitz, and the 16 letters in between the A and the Z of that name. Isn't that fun? All right. Anyway, U.S. real GDP growth contribution from tech capital expenditures. How crazy is this? Mark Andreessen said, technology is eating the world. How can you not, whenever you see a chart like this, like, what makes you want to be a value investor whenever you see a chart like this? I mean, I'm a technology only investor because of things like this. Gotta love it. Artificial intelligence, blockchain, my two biggest themes within technology, but everything has to be technology because you just have larger tailwinds. The growth, whenever you pick, like, picking stocks is one thing, but picking stocks in the right sectors just gives you inherent benefits to your growth. Yeah. Tanner, the nerd here. You guys didn't know A16Z? I'm sure you did. I'm sure, well, at least enough of you guys did. I'm sure there's maybe a percentage of you guys that don't even know what Andreessen Horowitz is. Maybe that's also the case. They're a very, very, And I'm going to add two more. Very, very successful venture capital fund. Mark Andreessen is someone to really listen to. Not only is he a crazy person with an unbelievable head shape, I don't know how he got it, but his ability to foresee where technology is going to go later and also want that future. Some people come off, or I come off crazy sometimes whenever I talk about the technology future that I foresee, because it can be a little dystopian sometimes. But he's very forward-looking, so much so that he's the original guy, like whenever he was very, very young, that created the Mosaic browser, the original internet browser that allowed you to sort of see a user interface of what we know of the internet today. It didn't used to look like this. There was used to be code, and then Mosaic came around. Some of the best stuff that you can read is about early internet, like the creation of Silicon Valley. The original tech gangsters, I mean, unbelievable. You have to start to look into that stuff if you really want to get interested in technology, because boy, oh boy, were they forward-looking when the entire markets told them that they were wrong. So this is why I'm a big believer in trying to keep that sort of mindset whenever you look at technology going forward, because things absolutely do change. The people that say, oh no, that's not coming, this is a fad, yada, yada, yada. Things change constantly. Humans adapt super fast. We've gotten used to things like ChatGPT, wearing smartwatches, having a smartphone in our pockets. Like, we just adjust so quickly to new environments. So new technology will happen. We're going to have Apple glasses. We're going to have, artificial intelligence and robots in our house, and they're going to take care of your kids, and they're going to drive your cars. And I know people are going to say, oh, well, you know what? I'm never going to send my kid in a robotaxi. I promise you, you will. I can promise you. People adjust like that. Like, it's incredible how fast people try something 3 times and they immediately adjust. I remember whenever I was a financial advisor and I had older clients, the average age of my clients was 63, which was actually really tough because a lot of them didn't want to buy into the things that I was wanting to talk about. But that's also where all the money is. You want to find the easiest way to separate people for like in their money. It's like, just look at age. Age demographics is one of the easiest ways that you can see if someone has money. It doesn't guarantee someone has money, but that is a true thing. Anyway, during COVID, DocuSign got extremely popular, and I was forcing people to use DocuSign. But some of the older clients, there was a tough barrier to try to get them to use this new technology. They don't trust putting their signature on there. They don't know if it's a legal document. They don't want to go on the internet. All of these things. Very hard to try to turn people to use these new products. And then I would say, okay, you know what? You're not comfortable on the computer all the time. I get it. I can mail you out these documents, but let's just try. Give me 5 minutes of your time. I'll walk you through this over the phone. Let's just see if we can figure this out. We're in COVID. We got to find new solutions. Then I get them to use it. And they hit the checkbox, they press OK, they sign their name, which, they don't even have to do it with their mouse. They can just pick a signature type. Anyway, eventually they do it. They hit send, and I say, hey, you're all done. I've already received it on my end. Fast forward to the next time that we meet, and I go, okay, you want me to mail it out, or you want to try the DocuSign thing again? They say, oh, okay, just do the DocuSign. I get it. Like immediately, the second time, this happened to me so many times, they just immediately get it. It was easy. It got what they wanted. They saw results immediately. Boom. Love it. Love it. Love it. I just saw. Someone said, where is it? Rolex needs to make a smartwatch. That would be the day. That would be the day. I don't think it would be impossible to see a company like Apple partner with a Rolex or a Jacobs & Co. for like a special edition watch, but I don't think that that will be the case. Tanner, you need some cybersecurity in your portfolio? I do. I definitely do. And it would probably be amongst the names that you picked, either Palo Alto or CrowdStrike, probably CrowdStrike. just because I like buying the number one names. Yeah, no, I don't think Rolex will, but okay. I was at an event earlier this week. Most CIOs and CMOs in Canada don't have a clue about how AI can help or not help, etc. It's crazy. I remember whenever I was leaving my job, and whenever people were asking, they're like, "Why are you getting out of financial services?" I was like, "AI is going to kill my job. They're going to absolutely take it away." Oh, no, 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 no. People want to see, people want to see an advisor. They want to get. I'm like, bro, people want to make sure that they have that their questions are asked, personalized questions for them, and that they have the highest return on their money. That's what they care about. They can go find their friends at a bar or at a club or like some other social event. They don't need a personal connection whenever it comes to their finances. So, I think the important part is that artificial intelligence makes things extremely personalized, extremely knowledgeable, and cuts down on the most expensive part of financial services, which is the human. Take that away and things get awfully cheap. Anyway, why BMNR only grow very small amount? I think it's just fluctuation in the markets. Some people are potentially selling off for, government shutdown concerns. Maybe they just not that they have a problem with BMNR, but they just want to get out of equities. It could also be the same reason that, Ethereum or BTC ends up seeing a little bit of a bid because it's a way to separate yourself from US dollars. There's all sorts of different ways that people could be selling their equities and rotating it into other investments. But that doesn't make the inherent business of BMNR, if you want to call it a business. By the way, they have 9 employees. 9. It doesn't make that inherent business any worse. The fact that they buy Ethereum and and Ethereum is going up. That's a pretty good business model if it continues to climb. ETH is about to break 4,400. Let's take a look. You're right. Remember, every dollar that this goes up, that's increases BMNR's book value by $2.7 million roughly. So, there's a couple more millions and millions. Yeah. BMNR dilutes a lot, yes, but every dollar of that dilution is not going into stock-based compensation, or I mean, not a lot of it. It's going into buying Ethereum. So if you're replacing that equity with more book value, it actually increases, essentially what you can look at this like is book value per share, okay? So if they increase more shares, but increase more Ethereum, but Ethereum runs, the book value per share actually continues to increase. And that's exactly what we're seeing. ETH per dollar of share on BMNR has gone from $2.50 up to 45 plus because they just continue this strategy of rotating equity into Ethereum, and they're able to purchase more Ethereum than I am. So I'm going to continue to buy it. They've just mathematically, they have proven that their strategy is yielding a higher result than if they were to not dilute. And I'm not going to dilute. I can't sell my equity of my own portfolio to go out and buy more Ethereum. So I'd have to find new debt instruments to recreate this strategy on my own. And even if I was to do that, I would never get the rates that they would get because they're buying in the millions or billions of dollars. So just inherently, while we do pay their extremely small headcount business of 9 employees a small rate to run this, type of instrument, they're getting such better rates. They're finding new ways to purchase Ethereum, stake Ethereum, lend out crypto. So while they might not be staking right now, they could find ways to lend out Ethereum for an even higher rate. that institutional knowledge is just better than what I'm going to do, which is, go to Coinbase or Robinhood or something and buy Ethereum, have a take rate that's going to be 10x higher than what they're paying because they have Coinbase Prime or something like this where they're paying 0.03% of, to Coinbase Prime to acquire that ETH. Yeah. Why does BMNR not stake right now? For the exact same reason that, they could find potentially higher yields or something like this through lending it out. Almost like, Bitcoin loans or something like this. So there might be other ways for them to get a yield that might not be as safe right now, but they can also do that while they're still very small. Okay. Let's get on to the next piece right here. There was a cool Starlink direct to sell things that is starting to show more value, but SpaceX not a public company. I don't want to spend too much time on that, but I did think that was quite interesting. Intel is now in talks with AMD as potentially a new foundry customer. That could be very interesting. Not only for Intel and AMD, but also for NVIDIA. I hope that every customer, Tesla going to Samsung, AMD potentially, they're not going to take their whole business and bring it over to Intel, but something along those lines would be awesome for NVIDIA if NVIDIA just, sole customer for TSM is NVIDIA. That's clearly not going to be the case. I'm aware I'm talking out of my mind right now, but I do just like the idea of just NVIDIA, TSM, no one bother the pair, let them do their thing. Love that. I hope Tom buys ETHZilla. It's only appropriate if he can acquire the entire business for less than a 1 times MNAV, right? Because if you're paying a premium on it, why don't you just take the amount that you would spend on that and just buy Ethereum in general? So they have all the institutional clients. They have the ability to do everything that ETHZilla can do. There's no, tech difference here. There's a difference between the way that I acquire Ethereum and the way BMNR acquires Ethereum, but there might not be the same ways that they acquire Ethereum between ETHZilla and BMNR. There is small differences. There's a proprietary way that BMNR acquires ETH, stuff like this, but they're getting similar rates. Retail customer versus institutional customer, very different, very happy to buy in the way that they are going to run that treasury. That's different. Thoughts on DLO? I'm a shareholder. I think that they're way too cheap for the growth rates, stablecoin adoption, payments still a very big space. Yeah. I mean, they're going global right now. They're seeing great growth across multiple sectors. CEOs still trying to fix things up, but mainly it's extremely cheap. Thoughts on Klarna or Sezzle? I don't have any really. Never understood why people don't just buy a firm, and haven't looked into it enough to give you a strong opinion on why people would go for these other names. Anyway, and honestly, I'm not a super big fan of any of them. And why I don't have any of them in my portfolio is like, are you telling me JP Morgan, Bank of America, SoFi, all of these customers are not going to do buy now, pay later inherently for their own business, underwriting that themselves? I don't believe it. Thoughts on Rocket Mortgage with rates coming down? Probably one of the better ways to purchase if you think there's going to be a hot home market and that rates are coming down. Like, people are getting very excited about Open Door and stuff. I'd probably venture to bet that rocket companies might be a better fundamental investment. Obviously, Open Door, with the amount of bullish sentiment that we can see, I mean, that company could 10x and the growth could stay completely flat. Right now, it's complete meme territory right now and has a bunch of hopes of future growth, but I don't know what's going to happen of that. And I'm not making an opinion one way or the other. But yeah. Um, speaking of Shift 4, are we buying more? I have not, but last time I checked, it was like $75. 77 roughly is where we're at right now. Yeah, and intraday today it was 75.89. That's crazy. 88 actually. Yeah, I mean it's insanely cheap. I bought last week. Um, yeah. Thoughts on new changes to day trading rules and impact on Hood? I don't remember what the changes were. They were taking away the 25,000. I don't remember what they were. You're going to have to remind me. I think there's a certain amount that you need to hold in order to be able to day trade. Now they're lowering it, like they're taking away the regulation. I don't think it'll have too big of an impact, but yeah. Tokenized loans with private underwriting. Tokenized loans. What do you mean by private underwriting? Let me know what, maybe I'm misunderstanding that. But yeah, tokenized loans will be a thing. And then I think that the ability to have fractionalized shares will be the same with fractionalized loans. So fractionalized loans will be a thing for sure. And like SoFi is going to make that happen soon. It was 25K. They lowered it to 5K. Yeah, I mean, it's going to have some impact. But we also have to remember, like, those are the lower dollar accounts compared to the ones that make Robinhood a ton of money. But yeah, maybe you're just training a bunch of little baby day traders that will be the active investors with large accounts into the future. Could be positive. I don't know. I can't imagine that's a bad thing for Hood. I just don't know what the positive impact for it is. Like, is that a 1% benefit to their business or a 20% benefit to their business? I don't know. Okay. I don't have any thoughts around the government shutdown thing. I don't have any opinions. The average length of a government shutdown is 8 days. I'm gonna hope it's somewhere around there. I hope it's quick, but yeah. Private investors underwriting the loans, I do not think would be the case. That I don't think. And if that is, that would be extremely small. Why would I want to underwrite a loan? I'm going to give it to the companies that can do that, you know? When is level 1 Noto? Okay. Government shutdown is yearly theatrics, another nothing burger. I mean, yeah, that's how I feel about it as well. It's not the first time we've gone through this. It's constant. So, yeah, not worried about it. Spending will increase. It always does. I don't see any change to that. It's going to happen. They're going to find some agreement. Okay. Ladies and gentlemen, let's double check that if there's anything else that I wanted to talk about, we'll do a quick rundown of the things that we did talk about. Agentic commerce we talked about earlier. I think this is going to be huge. I think it's insanely beneficial to companies like Shopify versus Amazon, which Amazon, might actually look like something of a headwind. How big of a headwind? No clue. Is it going to be a headwind versus Shopify? Yes, Shopify's. This is a good news story for them. SoFi continuing to push into SoFi Plus. Level 1 options are starting to roll out. Inherently going to be the best quarter we've ever seen. There's zero pieces of information to point to say that this is not going to be the smashiest of smash out quarters that we've ever seen. It's going to be amazing. So SoFi, very positive on that. I bought the dip today. Bought the dip on BMNR. If ETH goes up 4% and BMNR goes up 1%, that lowers MNAV. Happy to acquire more BMNR on that type of news. And then, yeah, government shutdown's a thing. Average length of the shutdown's 8 days. The S&P 500 ends higher 1 year after a shutdown in 86% of cases. The S&P 500 posts an average gain of 13% one after a government shutdown ends. That's kind of interesting. Government shutdowns don't even necessarily mean too bad of things for the S&P 500. Let's see what else. Google's Waymo extended its autonomous driving permit through the end of the year in New York City. The Made by Google hardware event that happened today showed off a pretty exciting product that Gemini is using to realize what it's seeing on the camera to give users better insights of what's happening outside of their door, in their backyard, or wherever, or even in their house. So that was quite interesting. Bitcoin and Ethereum have great months in October. Historically, this is like one of the best months for them. So people are buying the Uptober event. And BMNR continues to get more funds that end up tracking their growth. And so that cannot hurt the stock inherently, which actually gives a benefit to BMNR over Ethereum, is more liquidity, not just on Ethereum, but on BMNR itself. That's what also pays to be a BMNR over SBET, is just if you are the top name, you get all the top name benefits. The growth and income portfolios, the 2x leverage portfolios, the institutional acceptance, like you just get a larger premium by being the biggest name. Okay. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. The smashiest of smashy. Yeah. Okay. Thank you all so much for watching. I really do appreciate your time. I'm going to go. If you guys want to see me tomorrow, I'm going to try to do daily videos and live streams. Hit that subscribe button down below. That's all I ask of you. Till next time. Bye for now.